Cassie Young is a partner at Primary Ventures, where they just raised a $625 million fund built on a contrarian playbook.
The $625 million is huge for seed, which we think is very unique. The conventional wisdom at seed is to stay small. We fundamentally disagree with that.
In today's episode, Cassie warns us how the current hyper-growth around AI is masking a massive underlying problem that's coming for the market, the gross retention apocalypse.
I still very much live in fear of this. It might not be next month, it might not be next year, but it's ultimately going to come.
We also dive into why the classic competitive advantages are evaporating overnight and why relying on a highly networked founder is no longer a guarantee of survival.
The Zero CAC CEO who's not supplemented by amazing technologists, it's just not enough. Like, it may get you in the door, but it's not going to ensure that you keep the share that you get out of the gate.
So what is the formula for successful companies today? Cassie shares the one question her firm always asks before writing a check.
My partner, Ben, has this great line where he talks about when we're at the finish line with a deal, that's a fundamental question that we're asking ourselves.
Welcome to Topline.
Hey everybody, it's Sam Jacobs. I'm the CEO of Pavilion. You're listening to Topline. I'm joined by my good friends and co-hosts, AJ Bruno, the CEO of QuotaPath, Asad Zaman, the CEO of Sales Talent Agency. We've got friend of the pod and friend of Topline. That would be FOTT, friend of Topline. Just FOT. FOT, our favorite FOT, Cassie Young, partner at Primary Ventures, who's here to talk about the $625 million raise for their new fund that they just announced. She's here to talk about gross retention. She's our favorite operator turned investor in the entire world. Cassie, welcome to Topline. We're excited that you're here.
Well, thank you for the very generous introduction, Sam. And yes, longtime listener, first-time caller, but appreciate you guys having me on today. And as we were just saying, I think this is going to be a really fun conversation. So thanks again for including me.
This is the first time you've been on the show?
That's right.
That's all Sam's fault, by the way.
That's crazy. And I'm the one
like
who
to
made
think
it happen.
I like to think I'm ubiquitous elsewhere in the Topline content and
You are
Pavilion
in
broader
market,
communities.
that is for sure. Well, shame on us and shame on me, but welcome to the show. Asad and AJ, how are the both of you?
I spent the whole entire weekend Claude coding, like literally, I woke up at 6 a.m. on Saturday and turned on Claude Code.
What is with Claude Code that
I'm
it
plugged
makes
into the
me
matrix right now.
Like Lemkin was talking about this as well. Like it makes him want to wake up earlier and just get on it. Like
So when I was a kid, I got Legend of Zelda Ocarina of Time for Christmas, and I spent like the next week spending every waking moment. And I think Claude Code has the same like addictive
gaming type of thing.
Gaming, it's
It
like a video
definitely
game
does.
piece to it. And it's just anything you can dream up in your head, you can put to paper, and it's just a fun experience.
Well, it's funny you say that, AJ, because my husband was away at a bachelor party this weekend, and he said to me, "What are you going to do without me here?" Now, my first answer is March Madness because I'm a huge basketball fan. I'm like, Claude. I was like, I was going to get deep into
I'll be
Claude
fine.
this weekend. And
Well,
same thing.
Kathy,
It was
my
like Friday
team
night,
lost
I'm going to
on
go to
Friday
bed.
night.
Yeah, so you had more free
I
time.
just
than
was
me this
all
weekend.
yeah. It was a beautiful day in Philadelphia, so I played basketball with my daughter. Her tournament was canceled, but yeah, I was deep into it. But yes, March Madness was over the weekend too.
We did have some people at Primary build their brackets with Claude. Now, they are not at the top of the leaderboard, but reading some of their prompts was entertainment in and of itself.
I had Virginia beating Duke in the national championship, and that sadly is not a thing that will happen in 2026. So
Next
I've got
year,
a
Sam.
fun little fact about. So Pablo Dominguez puts together a big bracket. He has like 300 people in it, and you can put 4 brackets into it. I only do one, and I'm like in the middle of the pack, whatever. One of my colleagues, Graham Collins, puts together, I think, 4. So he's currently leading this bracket, which is a lot of money. There's a caveat, though. There's a catch. If you finish last place, you forfeit all of your dollars in a different bracket. And so right now, Graham is in first place and second to last place right now.
How many people do you think listening know what brackets are? Because I'm like, I wonder what they're talking about. I'm really curious. You guys are so like aligned. Is this a thing?
Everyone knows.
We'll get you involved next year.
all right, Asad, kick us off. Let's talk to Cassie.
Cassie, I think we should start with the fundraise. 625 million, which is a massive fund. Well, not there are these billion dollar funds, like multi-billion dollar funds as well, but 625 is massive. And in this, the thing that's really interesting is you have a go-to-market thesis. And go-to-market's been an interesting place to build for the last couple of years, AJ will tell you. We definitely SaaS, you can't think SaaS without thinking Salesforce, right? They kind of brought us into the SaaS era. But after Salesforce, the number of go-to-market tech companies that would be considered big winners, that list is fairly small from that previous era. Why are you excited about that category now? What's different?
The 625 million is huge for seed, right? Which we think is very unique. Like a lot of these big multi-billion-dollar platforms are with the multi-stage sort of aircraft carrier firms. And so the conventional wisdom at seed is to stay small.
Yes.
We fundamentally disagree with that. We can come back to that later, but let's drill into the go-to-market stuff first. And if we want to talk more about the fundraise, we can come back to that.
When you
Yeah,
say small, just so the
Yes.
audience has audience, it's like 100, 200 million. Is that what you're referencing?
Yeah, in general. I mean, and the general reason why people like to see these funds stay smaller is academically speaking, the bigger the funds, the worse the returns, right? And that's what you'll hear from people who object against that. And if you actually fact check that against the data, for the most part, that is correct. But if you peel back the layers of the onion around why that actually happens, usually one of two things are at fault. You raise more capital, which means that every partner now has to deploy more capital, right? So they're doing more deals, right? Instead of doing 2 to 3 deals a year, maybe they're doing like 6 deals a year and things just get a little bit messy. The second thing that can go a little sideways is you start to get strategy creep as a firm, right? So we are classical seed investment in seed investors. We do seed and pre-seed. We follow on in our existing portfolio companies, but our entry point is seed and pre-seed. Oftentimes when funds raise really large vehicles, they'll say, well, now opportunistically, maybe we're going to do some Series A's, right? And they start to get scope creep on what that was. And so our pitch to our LPs was, we talk a lot about what we call the atomic unit of a check writer, right? And our belief is that we can scale our fund size by scaling the number of check writers we have at the firm such that any one person isn't doing more deals per fund. Now, the reality of today's market is that the quantum of capital required to win a seed deal now vis-a-vis where it was 18 months ago is 20 to 25% higher. And I'm not even talking about these crazy mega seed rounds, right? I'm just talking about sort of your down the lane competitive deals. So our point of conviction is whether that's through growing our own bench, like in Fund 5, my colleague Tobias was a principal at Primary and now is a partner exclusively leading cybersecurity deals. We can grow talent that way. We can bring talent from the outside, which we did in Fund 4 with Emily Mann. But the idea is that any one partner isn't being stretched in unconventional ways. And the belief is that we invest in our resources and platforming in a way that can make a check writer more successful at Primary than they would be somewhere else. And that's kind of the pitch, right, that we give to our LPs around how we continue to grow. And our ambitions are to keep doing that, right, to defy the logic that you can't have a scaled seed fund. That's the vision for what we want to build.
This feels like it's almost an OSID problem. If you want more check writers, then you need a framework for evaluating who can write good checks and who can be good. Do you feel like that's a trainable skill? Do you feel like that's something you put them through the Primary boot camp, or you have enough data points and that's, and I guess related to that, do you feel like are we seeing a proportional increase in the number of great companies, or is it that your check writers need to be able to win deals from a more competitive set because the number of great companies isn't increasing materially, perhaps? Like, tell me, Fred Wilson always said the number of great companies is pretty much fixed. So all of the competition in VC is going to just tax away returns for mid-level managers that don't get into the best deals. What's your take?
So in no particular order, response to some of those questions. So on the talent side, I would say that our belief is there's something intrinsic, right, in all of the check writers that are successful at the firm. Like Primary's not the reason they're a great check writer, but what we enable them to do is to take what they're already super capable of and make them that much better because we give them, we call it unreasonable resourcing to help their portfolio companies, right? We've got 55 people on staff. 2/3 of them are not investors, right? They're there to help the existing portfolio companies. But the way I sort of describe what the fund looks like in terms of check writers is it almost looks like a mini fund of funds because each check writer has a square specialization lane where they spend time. So I may spend time in the go-to-market category, but my colleague spends time in infrastructure and another one spends time in healthcare. And we really provide a high degree of autonomy within each one of those lanes to say to the check writer, we trust you. You're here for a reason. Like, we want you to go and drive a multiple on your book, but there's a lot of different ways for how you can go and do that. You might do that by doing one deal that's a little more expensive than we would like, but you're crazy highly convicted in it. You might do that by doing a bunch of incubations, which is a huge part of our strategy and gives us a higher ownership clip. So we give people flexibility, but then our portfolio team, which we call Impact, really comes in and just helps supercharge what any of those portfolio companies can do on the other side. And what we always say is we back founders who they're visionaries, they're category creators. Like, they're going to go create the unicorn companies, but there's only so many hours in the day. So if we can help them accelerate that escape velocity, that serves everybody well. And so those resources help not only support portfolio companies, but going to your second question, Sam, they help us win deals, right? Because increasingly we're pulling those resources into companies before the term sheet is even signed to give them a taste of what they would get with working with Primary on the other side. Now, to your point, yeah, I mean, we talk a lot about the seed to unicorn creation ratio, right? So historically, 2.5% to 3% of all deals that have been institutionally backed at seed will ultimately become unicorn companies. And so it's actually a little bit of a TAM assessment here, right around like, how much room do you have to hunt? And then you have to go find those great deals. Now, to your point, there tends to be a lot of consensus, right, that happens around some of these great deals. For us, that means, how do we get to people earlier and earlier, right? So I said we do seed increasingly. We care a lot about pre-seed. Incubation is really interesting to us, but our belief is some of the best founders out there are still sitting in their current operating roles, and we have to get on their radar, 6 months before they even think about quitting, right? So that you're in there and that you build this relationship that's going to give you some degree of edge, when you're going and competing invariably against what will be a really compelling set of competitors.
You know how if you were to look back, you can find some math saying every year there's X amount of companies that are born, and this translates in Y amount of winners of different sorts in a certain amount of time, right?
Yeah.
Kind of the Fred Wilson thing.
Yeah.
But in this moment in time, you have this new thing, which is like a form of intelligence, like software that is intelligence, right? And if you look at when cloud was just coming up, the cloud companies now, the hyperscalers, do more revenue than the entire revenue of the technology ecosystem when those companies were born.
Oh,
And
for
so the
sure.
markets change, right? And so how do you think about the future? Like, do you think it'll just incrementally keep becoming a larger and larger ecosystem, and companies will become incrementally larger in terms of outcome sizes and success ratios and things like that? Or do you think some of this stuff might dramatically change? Like, maybe the largest companies will be dramatically larger than the biggest companies we see today. Like, where do you think the big differences are going to be?
So first, I'll agree with a couple things that you said. I mean, we actually just had our annual meeting for our LPs a few weeks ago. And one of the things we shared there was this perspective that flavors of this have happened before. So you mentioned cloud computing. We talked about open source. We talked about some of the high level language changes with the Javas and Pythons of the world, right? And just creating more and more market opportunity. So I think we are very much bulls on that reality today. And everyone's talking about the labor pools, right, that you can now go after. The white collar labor pool is $6 trillion. That's 20 times what's been spent on enterprise software and IT. So even if the 20x isn't realized, the magnitude of what will be realized, even if it exists somewhere between those two ends of the spectrum, is pretty material. And that has us incredibly excited because we think about a world where legal tech tends to be a topic du jour. So let's pick on that one for a moment. You end up in a world where people who couldn't have lawyers are going to have lawyers, right? So you just open up these use cases. And I know, Sam, in past Topline posts, you've talked about like the Jevons paradox idea here, et cetera. I think we are huge subscribers to that being the reality where it's just going to unlock really, really exciting new use cases. Now, of course, we are also wrestling with like the SaaS apocalypse top of the hour, right? And really who's going to be threatened and who's not. And we can certainly talk about that. But I think in general, our belief is this is going to be really, really big. And if you think about it, software is actually relatively small in the grand scheme of things. I mean, we had pulled some numbers for the annual meeting at that time a couple of weeks ago. It was 8.5% of the S&P, 1% of GDP, right? So you just have so much room to grow outside of that I think people lose sight of when they're just in sort of the SaaS bubble week in and week out.
I imagine that in all of this with LPs, I know some of the big LPs, and there's a lot of like downside case development that they do, right? Like, what's the worst thing that could happen? What's the bear case here?
Yeah.
When there's so much money being raised across this ecosystem, there seems to be this like convergence of belief that this is going to be huge. There will be massive winners. This is going to be all the things that I think the four of us believe in as well. Like, we're all bulls here, but there's a lot of alignment amongst the market that this is what's going to happen. There is a world in which it doesn't play out, right? And so, is that what is that scenario like? What does that scenario look like to an LP? Like, what risk have they decided? We think this is the risk side of this, the downside scenario, and we're willing to live with it. Is it that intelligence goes into the market, we all use it, makes our lives better? It just doesn't have the ability to have the economic benefit that we all think it's going to have. It's more like Excel than it is, what we think it's going to be. Where Excel did make life much easier, but didn't get the pricing power.
So I'm going to take a step back on that. And I think there's actually like a first principles question that we're glossing over a little bit with LPs, where at the end of the day, the creation, the sort of value creation that is coming from the asset class comes back to the founders. And so in any environment, but I think particularly in this environment, and we can drill further into this, is like you are making a bet on the people and that they are going to figure it out, right? Because there are businesses, right, that were born even 12 to 18 months ago that fundamentally look completely different today. Never mind, I feel like Intercom's the talk of, the month, right, in terms of them very deliberately cannibalizing the software revenue to go all in on Fin, which I think is an amazing story. I think Intercom's probably going to be the exception, not the rule, but it's absolutely amazing to see what they've done.
And by the way,
I
their story's not written yet, so like they're talking about
Totally
it,
fair.
but there's a long
AJ,
journey
they'll
we
be
gotta
fine.
have.
If you keep writing them 9-figure checks, they'll be
Oh,
okay.
Yeah.
I was 8-figure checks. I also, Cassie, if you didn't hear it, I told Austin and Sam that we were writing an 8-figure check to Intercom that
They bill it so much. I just wrote an 8-figure
That's
check. I was like,
amazing.
excuse
and I
me.
had
Yeah.
4 people say it was their favorite all-time Topline moment that reached out to me because there was like
Crazy.
a pause.
50% of Intercom revenue today.
It's from QuotaPath.
Amazing. But I think like at the end of the day, LPs, when they're picking managers, right, they want to assume that they're getting access to the best deals, right? So I don't want to gloss over that point, right? Particularly like at Seed, we think a lot about that. It's like the alpha that you're going to have with finding the best founders and the best opportunity. At Seed, it's a 10-year journey, right? So you just don't know what you don't know as you go and embark on that. There's a lot of chatter right now about this like king-making dynamic that is happening in Silicon Valley, right? Where you have the upstarts that have early commercial traction, everybody's preempting the subsequent rounds, right? And everyone's just kind of shoving more money in their direction. And it becomes this question of like, well, does that give them such a first mover advantage on the customer base and the reinforcement learning that it just boxes out other opportunities? I think, and this is a very category specific answer, I'm optimistic that because of your access to the labor pools and the total budget envelopes, et cetera, that you're going to have markets where it's not winner takes all dynamics anymore. And I'll give you an example. We're in the process of closing an investment in an AI-native CRM company, right? There are a handful of players that are kind of emerging in that set. It's a knife fight, let's be honest, right? They're all going after like the Y Combinator, seed to Series B companies, with it. But our belief is if you really do AI native CRM correctly, which means it is full stack, everything that touches the customer, total top of funnel all the way through to CS, and you're eating into the labor pools and the other software spend, like that's a big opportunity, right? It might not just need to be this world where it's only Salesforce and HubSpot.
Like, tell us your investment thesis. Like, because it's such an interesting, like, everybody hates the old school CRMs, but they kind of like get the job done, and Salesforce is massive and it's got all these like built-in advantages around integrations and the ecosystem, all of this. We all know that. And then there's this idea of like in the world of AI, like what if somebody took a blank piece of paper and said, let's create a CRM using all of this new stuff that we've got that's purpose built for the moment. Let's meet the moment with a blank piece of paper. And you can imagine this beautiful thing gets built. We still haven't seen that in market yet, right? Like we see like early signs of these new players, but they aren't there yet. Obviously, we're all early days. How do you pick in a market where there's two, three, four of these companies. They all kind of look similar. And then what's your thesis on this in the future? Because obviously for one of them to win, you have to carve out market share from Salesforce. What does that look like?
I think for us at the end of the day, like product wins, right? And so we've been talking about this concept of the JDCE, the jaw-dropping customer experience for a while, such that this is part of
Cassie,
just
by the
more.
way, because we
Yes.
saw each other in Mexico, we were talking about this at
Yeah,
Pavilion Gold. I use that in my memos all the
I love
time
it.
now.
I love it.
The jaw-dropping customer
I'm glad you guys
experience.
use it. And I think it is really powerful for operators, investors, and everywhere in between, where it's the jaw-dropping customer experience. It's not even just the killer app. It's like the whole product experience that the customer has in terms of how they're treated, right from onboarding to support. But like the killer app is really important. And I would say in the CRM category, the best product is going to win, right? Because people have such frustration, right, around what the historical bit looks like. So the challenge with AI native CRM, I would say, is in general, we make bets and go to market. There's one of like two strategies that the company is building against. They're doing like a classical wedge play where they've got a very, very big platform vision, but there's a clear wedge that they're taking down. And we have to believe that they're going to have the right to win in adjacent categories and win wallet share. And then there's like the compound startup approach. AI native CRM, like you kind of have to go at it from the compound startup approach if you're really going to take share. Now, there are other companies that, are doing like sales coaching, right? And then they're saying we're going to build an invisible CRM on the back of that. That may happen, right? We will see. I think that's just a harder path, is my personal conviction, to navigate to get there. And so for us, in any compound startup environment, irrespective of CRM or something else, there's a few things we're looking for. One is we actually lean in intensely at seed and do, what do your design and design partners look like, right? How are you managing those? How are you learning? What is your pace? And then what is just the velocity of the engineering roadmap, right? Because you have to be able to show that you're learning from the customers, moving quickly, and launching things that have quite a bit of breadth and the appropriate depth to do it. And so for this particular company, the founders are technologists by background. It's a set of serial entrepreneurs. And we really got excited around their product vision. And we talked with customers. What we heard was, hey, like we gave these guys feedback of, it's not enough that we have the top of funnel information. Like we need this information about our customers in there today. And they figured out, they're not going to be able to build the boil the ocean approach to customer success, but they figured out the one or two use cases that are hair on fire, and how do you bring those into the product? And so those are some of the things that we're looking for. Again, a lot of it comes back to the founding team for us in the early days of building. And my partner, Ben, has this great line that I think about frequently, where he talks about, would you bet against this person? And at the end of the day, like when we're at the finish line with a deal, that's a fundamental question that we're asking ourselves as a reflection exercise of, would we bet against this person? And the JDCE also, AJ, works into our memos and what that ultimately is going to look like. So let me pause there. I think that's like on the CRM side, how we've thought about it. What I would tell you in terms of like the Salesforce replacements is, listen, it's hard, right, when you look at these scaled companies that have all of the interoperable workflows built on the back of their existing CRM, which is why I think you see a lot of these AI native CRMs going with really early stage startups. And the bet, right, is that they can grow up with them over time. And that's the go-to-market strategy. You have other companies, right, that I think could kind of wind up in the AI native CRM worlds who are taking different approaches, right? So we've got several portfolio companies who are customers of attention.com, right? I think they're doing a great job at a different part of the market, right? Of saying, hey, we're going to replicate the CRM. We're going to help enable you guys to go and do that. And I'll be very curious to see where that play goes as well. But I think what's going to be mission critical for these businesses that are planting a flag and saying we are AI native CRM is they have to figure out how to go up market quickly. And when I was doing diligence on this category, and I spent a lot of time debating, do I want to make a bet here, yes or no? What I heard was like all of the upstarts are so native that like they haven't nailed this mid-market to upmarket yet. And so the gotta believe is that someone's going to figure out how to do it. And so I think that's where these companies are going to have to place their attention, right? Is to go and do the unscalable things to make it happen.
I've got a great suggestion for how to
Yeah.
move up market. They should use this company Delve. And with Delve,
My
you can
God.
get instant.
Sam, too soon. Too soon.
Someone's talking in his book.
Too soon.
So AJ, you
Yeah.
are the upmarket customer.
Well, this is super interesting as I listen to Cassie, because there's two things, specifically with CRM, and I've been talking about this for a little while as we think about it. We talked about it with Kyle last week's episode. Well, the CRM has two real big moats: data and distribution. And no upstarts or seeds have those. The product is completely commoditized. And I wrestle with this idea of, if Salesforce can figure this out and figure out how to build product and how to do it with a human-centric approach, but that you're governing AI, there's a little bit of I don't know. There's a scariness in the factor of like them being able to figure that out and doing it. The challenge is they've locked down their data. Last year, we saw the Matthew McConaughey commercials. That is what is actually going to be monetized in the future world. And the distribution aspect of it for these startups, that's also the challenge. That's the opportunity as I see it, and moving from the SMB to mid-market, because it's taken us honestly 3 years to move from SMB, where 70% was of our revenue. Now today, 70% is in the mid-market. And I don't know how AI really accelerates that.
What would you need to see, AJ? Like, let's say I am founder of said AI CRM company and I knock on your door and like, what do you use? HubSpot, Salesforce?
Salesforce.
My good grief, AJ. You want to be an AI native company, you're on Salesforce, like, look at my stuff. It's cool. Trust me, let's do a demo. And you're like, great, I'm in. What do you need to see that for you to be like, oh yeah, I'm going to move? Like,
This is the problem. I don't log into Salesforce at all. I get all of the data. I use MCP connectors. It all
How do you
goes
know
into
it's
Claude
real?
Cowork.
Like, how do you know the data is good then?
I have a trusty
Fingers
CRO.
crossed, that's my guy.
But that's the thing and I'm curious on it, is like, I don't need an AI native CRM. I just need the database and everything else plugs into it. And I, as a CEO, get what I need. We have momentum. We have dust. We have all of these things that are plugging in and getting the data from it that way.
I think it comes back to fundamentally, what do we mean when we say CRM? Because I think the definition of CRM is completely changing. Historically, I'd actually joked for a while, it's hilarious to me that they call it customer relationship management, because if you actually look at how most CEOs are using it, it's before they're a customer, right? So it's more like the PRM, right? Of what happens up until that point, and then a little bit through onboarding. And then, yes, some people who are fully, embedded in Salesforce and Service Cloud and all that stuff, maybe more fully embedded. To me, where the opportunity is, and this comes back to your question of why do you or don't you need it, is it becomes sort of this end-to-end map for everything that touches the customer in some compelling way. And I think like there are certainly, use cases where you can do the DIY bit. And I feel like the DIY bit has been a huge part of like the SaaS apocalypse bit. Fundamentally, I tend to lean out from that a little bit at the platform level, because I do think at the end of the day, buyers like having a throat to choke, right?
Yeah.
There's security, there's governance, particularly the more and more stuff that you put in it. But to your point, I think where the exciting opportunity lives in AI native CRM is half the companies you just rattled off, you don't need anymore, because you have this end-to-end platform that's doing the work that they may do. So I think where the opportunity is, and this has actually been a really challenging adjustment for me as an investor, is like in these full platform plays versus things that even look like partial platform plays now feel more like features. And I'll give you this example. I met this company a couple weeks ago where, candidly, 8 months ago, I probably would have done this deal. Like, I love these founders. I love the problem statement with where they were building. I always say like one of my best signals is just the market feedback, where if I reach out to 6 to 10 great leaders, how quickly do they get back to me and their willingness to take a demo sort of tells us the nature of the hair on fire level of the problem. I was like 7 for 7 on people taking demos. And as the feedback came back in, I'm like, this is an example where they're going to buy it for year one and they will go build this, because it's such a smaller part of an overall solution. AI native CRM won't be that exciting unless, you know what I mean, it's able to go and do this complete end-to-end play. And that's just what we haven't, I think, seen materialize yet. But it has me very excited to see what that'll ultimately look like.
It's really interesting because it was sort of where my question was going. You said 8 months ago, I might have written the check. Today, I'm not going to.
Yeah.
And you also wrote about the coming gross retention apocalypse.
Yeah.
You're perhaps the most famous essay on go-to-market of the last 20 years written by you.
Your bar is low.
It's Jeff Bezos' shareholders letters.
Yeah. We got to get Sam some more hobbies. Yeah.
My question is, are you seeing that play out? Because I feel there are companies, And I think it's a really interesting time because there are companies that even a year ago might have been touted as the fastest growing companies. And these are companies maybe that were also claiming massive revenue trajectories and like super, and they're going to go from 1 to 50 this year. And but those companies, and I'm thinking of one in particular where I think of that company, I'm like, that really feels actually like that is one that is like now very present in Gmail. It's very present in every email interface. It feels like it was a little early. And I'm just wondering, what are you seeing in the market, maybe from the portfolio and are you seeing this evolution? Are you seeing the gross retention apocalypse? Are you seeing, the prints of Q1 and what they're saying about AI adoption?
Yeah, so I'll answer kind of like macro and then like micro with some specific examples. So macro, when I wrote that piece, I was hoping I would have hard data to back it up. So I was like, who can I call that's going to have the hard data on this? So I called Kyle Poyer, who told me I don't have hard data on it yet, but this is on my mind. And I'm, working with a few other folks. I'm going to come back with something. And he has since published a piece. I think it was closer to the end of Q4. He and I actually went on the Gainsight podcast together to talk a little bit about this. And his data validated my hypothesis, which is that the AI native businesses had lower gross retention than the legacy SaaS counterparts, if you will. His data set focused on companies that were earlier in their journeys, you know what I mean, in terms of an ARR perspective, et cetera. So it was interesting to see that data. I think it'll be very interesting to see how it plays out over time, because if I were a betting woman, I suspect that for companies where that happens, it'll be a reckoning in year 1 or 2. And then the good companies they'll wise up about it. Do you know what I mean? And they'll say, okay, we have to get better at this. We have to improve it. And so if you look at it on a cohorted basis, you'll probably see it improve if the companies are doing that correctly. I drive all of our portfolio company founders crazy with that story. So I'm on the soapbox all of the time of like, is it ARR? Is it ERR? Like, what's going on? And so I think they're very eyes wide open to it. What we've tried to help them think about is knowing that it's going to take you a year to get a renewal in an enterprise environment. Like, what are the other leading indicators that you can look to? And so one of the things that we talk about is just the time to expansion. So whether that's time to commercial expansion or time to use case expansion, when I wrote that article, I talked about this like coming renaissance of the customer success function, which I still very much stand by. I do think people are thinking more and more about that reality. And actually, Amanda from One Mind's a great example where she had this whole thing she wrote on LinkedIn a couple months ago where she said when she started 6sense, she was obsessed with revenue, and she would talk about revenue over and over and over again. And with One Mind, she's obsessed with customer count, right? And like that customer, how do you make them happy, right? How do you grow them? And I think that's an important, like a mentality shift as people are leaning into it. But I do worry about it, Sam, still. And I also think that buyers still don't know how to buy. Right. So I've talked with a few enterprise buyers to say, I had this hypothesis that has not proven true, where I thought, coming into 2026, everyone had just been experimenting, where the individual contributors, the managers could just budget or expense whatever they wanted to experiment. And my thought was, as we came into 2026, there was going to be a reckoning with the CIO who would come in and say, we're not going to have this tool sprawl. We're really going to consolidate under a handful of vendors. And that was going to be like a crazy clearinghouse for gross retention. I do still think that's going to happen. It hasn't happened as quickly as I would have thought, because a few of the larger enterprises that I've spoken with, they've said, listen, we're just so hungry for our employees to be using AI that's like not on our minds yet. And that's not a blanket statement, but I've been surprised as I've had that conversation. So I still very much live in fear of this. I think it's maybe, it may take a little bit longer to see it. And I think I even said in that article, like it might not be next month, it might not be next year, but it's ultimately going to come. What I could not have predicted when I wrote that in the fall was if you look at a lot of the logic behind the SaaS apocalypse proponents, right? Fundamentally, they're saying, the reason they don't believe the SaaS valuations is because they don't know how to wrangle terminal value anymore. And I'm like, that actually is the gross retention problem in a slightly different, interpretation of really, can we count on this stuff in perpetuity? So that I didn't see coming from a mile away. I was thinking about it more from, these startups and what is it going to mean for the ecosystem. And now I think it's really interesting to think about at scale.
The other point around that, Cassie, is just that what Amanda said around customer count, I think is the other side of that, which is expansion. There's a terminal value of expansion versus terminal value of like the GRR aspect, and seeing that play out a little bit.
It is possible that with some of these startups, as they move through the first few years of existence, they might have really fast revenue acceleration. And then over time, in year 2, year 3, they become a little bit sharper about their true ICP. And they're like, this is what we really need to be doing. And so they might have a gross retention problem, but they might have NRR that's fine as a
For
result.
sure.
And so you might
Yeah.
not see it the same way, which is people are going to report the good number and kind of hide the bad number, right? But there might be a good reason for it, which is we went wide. We did what OpenAI in a way is doing, right? We went wide, we ran a bunch of experiments, and we're now narrowing our focus right now.
Yeah.
The other thing that I'm noticing, I had this really interesting conversation with the founder on Friday, and he's collapsed his engineering, product, and design team into one. And he's like, the way I envision my company right now is, and they had, I think, about 30 million in ARR. He's like, I see this as I have the product team that is lean. You have people that are doing all of those three things. It's built into one unit. And this team has to work very closely with go-to-market, where they have to be hand in hand. And the reason his thesis is that there are no product advantages that are long lasting anymore. I'll build something cool, my competitor will build it tomorrow, right? So if everyone can catch up in minutes and days to your fancy new thing, then a lot of the game is building an organization that can stay one step ahead. And one
That's right.
step ahead is about understanding the market, which your go to market team is in market. So they're learning, they're listening, they're getting signals. And I need to make it so that this team is feeding my product team. My product team's leaner and meaner and can quickly build and ship. And that's how we stay one step ahead of the competition. It's a little bit of a different sort of mindset that I'm noticing now, which is like comfort with the idea that the whole game is just to be one step ahead.
So much gold in what you just said there. Maybe to kind of break it into the ICP and then just kind of staying ahead in the product side. So I completely agree with you on the ICP side. I think it's not uncommon, but I think we were actually talking about this in Mexico a couple months ago, where in Series B plus board meetings, you see the numbers for both GRR and NRR broken out by current ICP customers versus legacy ICP customers,
Yeah.
right? So I think it's, of course, when you're in the early days of building, you have to cast a wider net because you don't know, do you know what I mean, where you're really going to strike in terms of that great resonance of the solution that you've built. I think what you want to be mindful of is that you're not losing the customers, right, that should be in that ICP. But I think some healthy churn early on is actually a very, normal and solid thing. But it's, being intellectually honest about the reporting of who's our ICP today and who are we losing that's in that or outside of that. To your point on staying ahead on the product, yeah. I mean, I'll tell you like one tough learning I had, do you know what I mean, as an investor, which was, we kick around this term at Primary called the Zero CAC CEO, right? And you can
Mm.
imagine what that means. But it basically is like, this is a CEO who's very well networked in the category. They've got like a clear right to win. They're going to use that to their advantage. And I think for a while, I may have over rotated in a few instances, you know what I mean, for saying, okay, like we love these Zero CAC CEOs. It's not enough on its own for all of the reasons that you just described, where the Zero CAC CEO who's not supplemented by amazing technologists who can do exactly the things that you just described, right? Of being, they have the vision, they're a step ahead of where they're going, et cetera. It doesn't matter. It's just not enough. Like it may get you in the door, but to your point, it's not going to ensure that you kind of keep, the share that you get out of the gate. So for us, when we're assessing founding teams, and I'm not even just talking about go-to-market, I'm talking about any category at Primary, if we say it's a Zero CAC CEO, the next question is, well, who's the technical co-founder? Do you know what I mean? And what are they going to do to help this business as well?
When I hear being one step ahead, that does not, I hate to bring it back to business school parlance, but we're all talking about it like that doesn't sound like a moat, like that doesn't sound like any kind of sustainable competitive advantage. And the thing that my mind goes, as it typically does, to like a bunch of weird places. But one of them is that, yeah, if there's no terminal value to these companies because everything is just like I was one step ahead for a little while, in the same way that like Barry Diller was one step ahead at Paramount, or Michael Eisner was one step ahead at Disney. It's like, well, almost feels like maybe they shouldn't even be public companies because sort of the nature of public company for me is like the durability of the cash flow. It's like,
Yeah.
yes, the thing's going to be around. There's switching costs. There's
Yeah.
brand, there's network effects, there's data that they can leverage. If everything's like, well, my guy works really, really, or gal, my person works really, really hard. It's like, okay, well, that person works really, really hard too. They're going to have a moment in the sun and then the sun will set.
That's a lot of
Yeah.
comfort with the past, though, right? Because yes, the way that we did this in the past was different, but the games change. Every couple of decades, the games change. And this new game might be exactly that. You see it in many domains where it's about staying a step ahead for a very long period of time. Like, I watch a lot of football. Football is that. Like, every season, you got to stay a step ahead, and that every game, you got to be a step ahead of your competitors. And then you do it over enough games in a season, you win, and then you come back and you have to do it again and do it again and do it again. And if you stop doing it, your value as a football team goes down. And so Real Madrid is the most valuable team in the world because they can stay one step ahead for a very, very long time. You see this in many other domains as well, and that might just be the new game in town. Now, it's a very uncomfortable game, right? Like, it's way more
I don't think you do.
comforting.
I don't think you do see it in a bunch of other domains.
Well,
Asid.
Asid sees it in his business.
You
I
see
mean,
it in
STA.
pharma. Pharma is all
Yeah.
about, can you come up with the next thing? And like, you
No,
get
pharma is
even
about intellectual property. Pharma is about like you're securing rights that sustain for an
Yeah.
ongoing period of time. Like
but you're going
if
through these
you didn't
developed
have a
10
patent
investment
on,
cycles, like 10-year
Yeah.
investment cycles to come up with that thing to stay for ahead for the next 10 years. So you get this period of time where you have IP,
yeah, but
which
I'm
you're
saying
investing into.
there's guardrails that protect the IP. Like if there wasn't a patent on Lipitor, like Pfizer would have a much lower incentive to invest in it. If the minute that you bring Lipitor to market, every single person can copy the molecule, and like then Pfizer probably
Hedge
shouldn't be a
Yeah, but you
public
have to do
company
it with
anymore.
FDA
But
approval.
Primary is
yeah.
not a public company. That's my point. Like these are this is why there are artisanal businesses, because staying one step ahead isn't something you can really like count on for 3 decades.
You could stay one step ahead on product at all times and still have a losing business, right? So what's the difference between the people who do and don't? I would say it comes back to the customers, right? Because if we actually pick on, some of the examples that you just rattled off around like pharmaceutical and IP, the businesses that do this really well, they stay a couple steps ahead in a manner that wants customers to expand the use cases faster and more deeply than they will anywhere else. And the more and more of that customer information that gets on their platform begets more and more reinforcement learning that that vendor then owns, that makes the switching costs that much higher. And so I think that's actually the logic behind a lot of this kingmaking, right? Is if we can help people get all these customers on there and really get in there, then that starts to look a little bit stickier around what that looks like. And there is sort of a degree of IP. So that tends to be how we think about it. But it again has to be like the proof is in the pudding. It's not just that you had this perspective on where the market's going, is that the customers are following you. And you see that very clearly, and that you consistently earn this right for them to want to do more and more with you and spend more and more with you. And I think if you don't see that materializing, that's where like my spidey sense would be up about, smoke in the house.
Databricks, Snowflake, and Amazon have built agents that are purpose built to help a customer migrate over. And I found that really interesting because they've taken the cost of migration down and the timeline of migrating and the headaches of migrating down quite dramatically. And one of the friction points when you're moving from one vendor to another, if you're a large business, let's say you're moving from Snowflake to Databricks, is like, it's going to cost me so much time. It's going to be the project of the year. But if it's the project of the month and it doesn't cost me that much, maybe I
Yeah.
do move. Like, I like your new
Yeah.
feature. What are your thoughts around the future of switching costs? Like, what is it going to come down to? And what do we have to be prepared for? Like, is it going to be, are we all just going to have agents that are going to help us move around? And so you can very easily move from one to the other. And only the firms that lock you up from a data perspective, where you have to start from scratch on a data side, that's the switching cost. It's like an annoying one, but it's there.
My hope is that that is one day the world that we live in. I'll put out an aspirational thought for you guys. I said to someone at Primary recently, I long to live in the world where no one ever files a support ticket ever again, right? Because if that actually happened, if you think about it, like most support tickets outside of like reset your password or whatever come from like flawed implementation, or your configuration is out of date or something around that. So I long to live in the world where someone has figured out how to make it easier just to get set up and get set up correctly. Like when I was running revenue teams, what I would always say to our team is like phase 2 never happens, right? So if you let that out without that, it will just never ultimately materialize. I think today there's work being done on that, and I would love to find a company to back, by the way, that is building in this category. So if anyone listening has ideas, please get in touch on that. But I do think you see this investment in forward deployed, right now, right? As a stopgap to go and do that. The best organizations are saying, if we have that forward deployed motion, what are we learning from a product perspective that we're putting in practice immediately to productize the implementation? So one interesting organizational change I've noticed in portfolio companies is that implementation in many places is being moved out of the chief customer officer lane or the post-sale lane and into product and edge, right? Because they're viewing it as a product opportunity in terms of how to get these customers up and running, which I think is pretty interesting. Now,
Should
in
that
some
change how we
businesses,
calculate
yeah,
catch then?
totally depends on like exactly how those resources are being used. But actually, to piggyback on that question, I was chatting with the CFO of Invisible Technologies, Varsha, who said this story where like they've got very meaty multi-year enterprise deals, and they made a very deliberate choice in the office of the CFO to invest aggressively in FDEs because they already have the data in terms of how that is translating from an LTV perspective. And even if you want to say like LTV has to be taken with a grain of salt right now, they know it translates into enough revenue in the first couple of years and it more than pays for itself. So your question is the right one, right? But the reality is many people are saying throw the unit economics out right now because I just need to learn as quickly as possible. So I'm going to do some of the things that look unscalable and then I'm going to send it over to the product org to figure out how we engineer some of these things out. But aspirationally, I want to go to the world that you're describing, right? Where we have figured out, how to use agents and to do that very effectively.
I think what you just said, by the way, is the distinction between FDEs done right and wrong. The whole FDE concept was it was going to help Palantir figure out what to build. And that feedback loop is what was so special about the whole
That's
model,
right.
like one of the
Yeah.
defining features. And so you see a lot of AI companies that have FDEs, but there's no plumbing to be able to connect these two things and create a feedback loop. It's really just implementation. And so the ones that are doing it this way, that is the true FDE model.
We've spent a lot of time internally talking about the Palantir model, and they did exactly that, right? Everybody said, oh, it feels servicey. No, they built product off of it. It was a long game, but that's precisely what they did.
It does feel like a lot. I mean, 80% of the AI innovation is going into pre-sales. What we're talking about is a post-sales motion. So Cassie, when you say, any companies out there that are doing this, like what specifically to the FDE or specifically in terms of technology and what they're doing is what you're looking for?
Where businesses get stuck, I think, is where they end up in like one feature specific lane or like a partial platform. And so when I think about what's going to be really exciting I always like hesitate with post sales because I tend to, my friend Sangita always says like ban post sales as terminology, right? So the customer success side of it, it's something that can really touch the customer journey end to end. And so what I mean by that is that example I gave on implementation. Implementation is one part of a way bigger problem, which is that, customers fall out of sync with configuration requirements all the time because they replatform, someone replatforms, something breaks multiple times per year. Then you're doing these implementation health checks for people who've been customers for 4 years, only to issue them an SOW for $20,000 to get up to speed. And so for me, where I have energy is it's what's the play that can actually eradicate all of that, right? So you're kind of living in the world where the way I describe it is, customer success has promised to be proactive versus reactive since the dawn of software. It's not happening. Right. And I think it only really happens when there is an agentic play that's in there that kind of spots these challenges with customers before they even come up. And I would say like there's always the value equation and the ROI story, but a lot of it comes down to the technical configuration. So I would say my enthusiasm comes from how do you solve some of those technical configuration roadblocks in the customer experience that just makes the value selling and the ROI story that much of an easier tale to tell. And I'll say the same thing. I mean, the outcomes in the customer success category have not been fantastic historically, right? Like we talked at the onset around go-to-market more broadly, even specifically within that. But same deal. If you say you can go after these labor pools, you know what I mean? Because suddenly the shape of that organization looks completely differently, right? Because we've now moved it to agents who can do this. That again, paves the way for larger potential outcomes.
And that part of the bow tie or that part of the funnel looks closer to support than than the sales side does. So you can see that side like really benefiting from agents. Cassie, you're looking at go-to-market founders, and so many of the bets that you make at the seed round are less about the specific idea it's going to evolve. So much of it is just down to the person, right?
Yeah.
What does a a good go-to-market founder look like to you? Like, what are you? Yeah, what type of people are you looking to bet on? What stands out to you? What are you looking for?
At the end of the day, for any founder we back, like we want them to take us to the mountaintop, right? So their ability to sell the vision for the company is hugely important because it's going to be indicative of their ability to sell customers, to sell employees on taking a risk to come to work there, and then selling stock, right, to downstream investors to come on board. And so one of the things is like I very frequently know within 10 minutes of a first meeting of like, is this a person where I'm like, man, I shouldn't be an investor anymore. I should quit and go and work for them. That's a pretty sort of easy read. And so, and every investor has like their personality flavor. But for me in particular, I think that's like particularly important in go-to-market where you have to like paint a vision of where the world is going to go and bring people along on that ride is hugely important. I do think in go-to-market specifically, like at the end of the day, obsession with the customer is like, I always say, if you do everything in your power to make your customer successful with your product, you have to catastrophically screw something up not to succeed as a business. That is true in every category. There is like no room for error with that within go-to-market because you are selling into people who know, and they can smell the bullshit. So I think that's one where, I love within go-to-market, like joining sales calls, listening to how they pitch, listening to how they objection handle. Like that's a huge, just kind of telltale sign for me. Do you know what I mean? Around, is this a person that I want to be excited about? The third we talked about earlier, which is the technical counterpart, right? And sometimes the founder themselves will be technical, but if they're not, if they have more of a commercial bent, which you often see in the go-to-market world, well, that's starting to change, I think, with younger founders
Yeah,
coming
definitely.
up for sure, is, how are they going to be able to keep pace, as we said before, and just ship product at an unheard of velocity. And in fact, if we go back to like some of those risks around the SaaS apocalypse, we talked about like the DIY risk, which we're not, overly concerned about the enterprise. There's the horizontal model risk, which is like moderate. To me, the biggest risk is the new entrants and how quickly they can move, right? And so we just want to make sure that we're seeing that. But similarly, if you have a pure play technical founder, the question becomes, what's their right? Do you know what I mean? Because you guys get it. Like these are the go-to-market buyers, they are a very viral, close-knit set. And so if you are the sort of lone wolf technologist who can ship product, like what else is going to be true? Do you know what I mean? That's going to get you in the room with the likes of you guys, right? Around how you're going to get, excited about the product and sort of get that viral coefficient built into it. We, of course, have other like frames at Primary in terms of this, what we look for in founders around, like, are they learning machines, right? Like, what have we seen from their past life, right? Where they've shown evidence of that. What have they been great at, right? We always say if someone has never been great at anything in their life, regardless of whether that was school or the rowing team, like how are they going to be great at this? So that's like so these are like the types of questions, right, that we ask at a more general level.
And Vinod Khosla has this like say, I don't know if it's a saying, but he likes to say that the biggest innovations in any industry come from founders from outside of those industries because they look at something with a fresh perspective. So he's like, I want to bet on people that can make 100x impact from where we are today. And I believe that happens when somebody's coming from the outside. Do you think that the next big winner in go-to-market is going to be somebody who came out of go-to-market and built for it, or came from outside of go-to-market and builds in it?
I think it could be either. Like, I would not turn my back, do you know what I mean, on someone who I thought was compelling in other ways, who did not grow up classically in the go-to-market organization, because I think the one thing that's particularly interesting about go-to-market is that it's the tip of the spear for every company on the planet. So even if you didn't come from the go-to-market world, you have an appreciation, I mean, for the importance of what that means for the overall business health. And so I might have a different lens on that in another category, but within go-to-market, I absolutely would talk with the person who was a brilliant product leader in a very different industry who maybe, in the monthly all hands kind of heard about just like these insane challenges and what was ultimately going on with voice of the customer or whatever it may be. So I'm not closed off to it. But there is a question of like, how do you get distribution and how do you get distribution quickly? So that's a place where we really want to test those commercial instincts around like, how are they, going to get in market and get share quickly. And this is a place where like we have a team that can help with that. But as I said earlier, that's not our job. Like our job isn't to find product market fit for the companies, it's to accelerate that. Like the founders we back are perfectly capable of doing that on their own.
Do you think that the next big winner in go-to-market tech is going to come from somebody who's coming out of go-to-market and building for it, or somebody who's coming from the outside and building for it?
I think it's going to be someone who was a consumer of it in a major way, whether they were in go-to-market or outside. Meaning I've met a number of like great technologists who have they've been stakeholders and taking on annoying projects. Do you know what I mean? To help go to market. But I think it's going to be someone who was a consumer of the problem statements, irrespective of what function they may have been in.
I think it's fascinating right now how, you used to hear this thing of like you go to an enterprise customer, they want you to build something custom. You don't do that. You have to stick to the roadmap. And now we know that you could potentially build product that is that contemplates a separate unique instance for every enterprise customer using Claude Code and AI and things like that. And so then I think what I've noticed in people that have experienced the GTM problem, so to speak, the people that is that they, to your point, Cassie, they narrowly define the problem space. They're like, well, this was a particular, when the prospect called me, when the salesperson called me, they didn't do a mutual action plan. So I've built software that's just about designing mutual action
totally.
plans. Like it's got to be right now, given the capability, your vision has to be world changing, or it's just too small. You're going to get blown out of the water.
It reminds me of the company, it was probably 10 years ago, that just did signatures, email signatures.
Oh my God, really?
And I was like, is this really? They were
Good grief.
acquired successfully at one
What?
time.
That's
Don't you remember
Exclaimer.
this?
Are you thinking about Exclaimer? Exclaimer is
No,
like
it's like Signaturely. It was one of those LY companies.
Of course, it was an LY
Oh, it
company.
was definitely an LY company. But also, Cassie, this reminds me also 10 years ago when I was pitching QuotaPath, I was at First Round's partner meeting, and I'm sitting there and pitching it. And the last question was, AJ, you're like a go-to-market leader. Like, tell me why I should believe that you can build the right product or vision. And I don't remember my answer, but I remember the call 30 minutes after the meeting with Josh Koppelman saying, you didn't get that answer. You definitely did not nail that answer. I am not a first round company today because of that.
Yeah.
But Cassie, my point that you made, my question
It
here
worked
is
out
actually,
just fine, AJ.
it worked out
Worked out
okay.
just
I
fine.
think we did okay. But
Yeah.
I put a chip on my shoulder and I was like, all right, I'm going to show you. I'm going to be a product-led growth company.
Yeah.
AJ
And we
is just
pivoted away
collecting
from that.
chips like in life. Like
I
anytime
just
somebody
chips on
does
my
this, it's
shoulder
like,
for
great,
anything.
you.
I have them all memorized. But you said earlier, I think this is a really great point around the product. The best products win. And then now we're talking about go-to-market and go-to-market leaders. As you look for your portfolio, and how many founders have you backed at Primary personally?
So in total, our total portfolio is about 100 companies right now. For me, I've got about 8 in my book right now.
And I'm sure you've looked at like just the backgrounds and personas of all of them. What could you give us some details on this percentage came from go-to-market background versus product versus technical for you?
As I said before, I'll look at any type of founder. My style tends to do really well with serial entrepreneurs, and I just like know that about me. And I think that's less about primary and
I'm
more just
updating my
about.
resume right
Okay.
now for you, Cassie, for the next time
Amazing.
around.
Excellent. I look forward to that. But I do, if you actually scan through the companies that I've backed, there's a lot of repeat entrepreneurs in there. And the way I think about that is they have real unfinished business. And I just love working with those people. Do you know what I mean? Where they just come and they've got this
Where
like
they have chips on their
amazing
shoulders and
energy.
they're a little
Yeah,
frustrated
chips
about
on, what do they
things.
say? Chips on shoulders, but chips in pockets, right? So we love that. But I would tell you, like, I've absolutely made bets on, I backed a young founder at a company who was the type where, he was getting cease and desist at 16 for the types of companies he was building. And I'm like, this guy's fascinating. Do you know what I mean? Where he's like a classical technologist. He's got to learn the go-to-market side, but like, I probably wouldn't bet against him, right? Like he built software while he was a summer intern at a company, and the CFO of this like pretty well-known large company said, drop out of school and come work here. And he's like, I will drop out of school, but I'm going to go start this company, right? When I go and do it. So I very much have an open mind around it, but I'm also sensitive. Like it's Seed, it's a marriage, not a date. And I mean, AJ, you know it. It's like there are highs, lows, sideways turns, everything in between of like the best companies in the world have that. And it has to be a partnership, I think, between the investor, the board member, and the founder. And so a lot of it for me is just like the personal fit. And as I said before, it's the way it's kind of shook out is that I tend to do well with the serial entrepreneurs, but I will absolutely back the first timers as well too. And I lost a deal last year that I was kind of still very upset about and still tracking, where it was a pure play engineering co-founding team. And I just fell in love with them because I think they had like amazing customer centricity for 2 engineers. And, they had come in my direction in a totally different way. And I'm the short version, the short answer to the very long-winded version is, yeah, I'm very open-minded. I've done a little bit of everything.
Cassie, it's been amazing to have you on Topline. I can't believe this is the first time, but there will be many others.
Okay, I'm glad I can get the return. Yeah,
We
yeah,
might
I
even
know.
want you to be like a co-host for a period of time, if you'd
Look
be up for
out.
that.
Yeah, yeah.
So we'll see.
Well, I
But
feel
one,
like with you gentlemen, I easily could just hang out here and just shoot the shit for 5 hours. So I'm proud of us for keeping the conversation
This is what,
somewhat
yeah, this is what
focused today.
we were meeting like for years before. Like, why don't we actually start recording these conversations? And here we are.
Yeah.
Basically
Topline,
wanted
4
our
years
weeks
later.
to feel less miserable, and we're like, this is fun. Let's just do this, and this will be a nice little balance.
Cassie,
Amazing.
if
Amazing.
there's founders or operators listening, they want to be incubated by Primary, they don't want to get that form template response from you, what's the best way to match the criteria so that they can be a primary company? What do you think?
Yeah, absolutely. So, first off, the best way to get in touch with me is just via email at Cassie@primary.vc. But what Sam's alluding to is I was joking as the show is getting started here that at this point, there's no excuses in the world for not doing homework and research before engaging somebody. And so nothing drives me more bananas than when I get these inbound emails for businesses that have nothing to do with anything where Primary is focused or a different stage. So if you go to our website, very clear what our specialization areas are. I have a public thesis that I have written around what we want to do in B2B go to market. I will not do a deal that is not in that thesis area because I only do 1 to 2 new deals a year. And the gracious gentleman at Topline also allowed me to write my most recent editorial, which also focuses on that thesis. So please read the thesis. And if there is a fit, get in touch. And if you know someone building in any of the other categories, please feel free to reach out to me as well, too. And I'm happy to get them in touch with the right partner on our end.
Do the work.
Do the work.
Cassie, thanks so much for being our guest. We'll talk to you soon.
Thanks again for having me.